Hello friends, welcome again. This is SK Advisory Private Limited. This video is episode 7, continuation on the basic knowledge on chart patterns. In previous session we had learned and analyzed two charts that were a bearish expanding triangle and other one is continuation bullish rectangle pattern. In this session we will analyze bearish rectangle pattern. It happens when price is going down and after pattern is confirmed price will probably continue going down. The logic behind the pattern and the way to trade exactly as the same. Bullish rectangle, of course, the only thing that changes is which size you are looking to trade. When price breaks below line connecting the lows of the rectangle and will be retraced back to this line tested as resistance as the stop and to open a short trade the stop above highs 2 and 4. As the time frame breaks below the lower line, it will usually confirm a supply zone from highs 2 and 4, so you can count on sellers to help you. One of the problems you will find with this simple chart pattern is that price will oftentimes trace much deeper and closer to the supply and demand zone. So you find that these patterns are actually a very inaccurate way of trade. This is why learning supply and demand trade is a better idea than following a simplistic pattern. Not always, of course. Most part there are not the best way to trading at all. However, some people find it easier to trade with this pattern instead of analyzing price in more organic way. The next pattern we are going to overview is the bullish flag. It is similar to rectangle in a way, but it has few extra twists. Starting with the bullish flag, first imagine that it will take a bullish rectangle, rotate it in a way that both flying become down sloping. This pattern we see with this name because it is supposed to reassemble in the shape of flag. The trading part of price is that there can be reassembleness in the flag, also again a simple. Analyzing it might be useful over quickly recognizing the pattern is visual way. The confirmation for a bullish flag happens when price breaks above the upper down slope in line. Then they will create and send back it to retrace it as support. One advantage of flag over the rectangle is that since we are dealing with a sloping breakout line and price needs to retrace to its steepest way to signal made that means you will enter will be closer to your stop and therefore it will take less risk. The stop loss should be below the lowest low in the flag and tip profit should be at least 3 times as big as the stop loss size. So rest all charts we will analyze in our upcoming sessions. If this information is helping you then do like, share and subscribe to our channel and press the bell icon to be notified on every update from SK Advisories. Thank you.